Good morning, guys. So today I'm just going to be showing you the trade that I've already taken right now for the week as we are starting this week. It's GBP CAD. So I'm just going to break down everything based on how I'm seeing the market basically and how I'm going to manage the trade. Because like as I'm looking at it already from last week, I'm still holding that New Zealand CAD trade. I'm still holding it, and I just took a GBP CAD trade right now because I can see everything is lining up for me, and it makes sense even when it comes to how I'm going to manage the trade basically. So let's dive in, guys. I'm just going to start from my week, like my monthly, and show you everything how I'm going to like be scanning the markets. So let's go from the monthly. If we take a look, basically on these higher time frames, I'm just basically marking or highlighting my highs and lows basically. So if we take a look, this would be our high for the monthly, and this would be our low for the monthly, of which we have already taken out all the liquidity that has been accumulated or generated around this area, and price is already moved to the upside down, to the upside, as you can see. So what happened basically, this is a bigger correction. As you can see, we had another similar correction here, of which price didn't continue to this highs. It decided to come and retest around these levels, as you can see. So with that being said, let's clear our chart and go to the weekly time frame. So I'm just going to break this. I won't take long, guys. So I hope like as you're watching the video, hit the thumbs up, like, and subscribe. So yeah, thanks for the support, by the way, guys. Thanks for the support. So, and if you're going to be watching this video right now on TradingView, please follow my link on my profile. There's a link to my YouTube channel where I'll be uploading all my analyses, all the videos that I do on my personal analysis of the market, how I'm viewing and how I'm going to take my positions and everything. Please just follow that link to my YouTube channel. Thanks. So let's continue. So if I'm looking for or looking at like basically let's highlight this range, right? Let's basically try to highlight this range. As you can see, before price, as you can see what happened here, we had that impulse, we had our correction, of which this was our footprint, our correction, as you can see, and this was the first initial point where price started selling. You see, it started taking that move or making that move to break this whole consolidation. It started from around here, you see. So this would be around here would be our footprint. This would be our footprint. That is why I have highlighted that area around here, as you can see. So what happened? Price sold, as we said, we took liquidity around here, pushed, started being corrective. Now we have retested. So this is where volume has been accumulated. Now we have triggered, as you can see. This is where volume has been triggered, as you can see. So from the monthly, weekly, everything is lining up. I can see that we have potential selling momentum, as you can see. We have selling momentum, as you can see, from the monthly and weekly. So let's continue to the daily time frame. I feel like this one is going to be a short video. I don't know why, but yeah, it's just straightforward, this one. So let me just delete this and also this. So if we are looking at the daily time frame, basically let's just look at what's happening. As you can see, what is price doing here? You can clearly see that we are in an ascending channel structure. As you can see, we are in an ascending channel structure, but I'm just going to delete this because like my main reference is this high, as you can see. So I don't need to be drawing all these trend lines everywhere. Then this one is the other one that is valid for me, but this would be a long-term play on the monthly. It can take years to come to this to come to this trend line around here. So basically, let's break down furthermore what happened. So we had our push to the upside, our first correction here, continuation. Then what happened? We took this high, as you can see. This would have been our 90%. As you can see, this would have been our 90%. So for this whole move, because if you take, let me just check my Fibonacci, like so. As you can see, if you were to take a look at like this from here, let's say for instance you got any entry around here or here, whatever, you'll be even if like around here. Sorry, let me just I'm looking for the buys. So even if you were to take this entry with like around like 30 pips stop loss, you'll be getting out around here at the 90% through, as you can see. So you'd be out for around like 21%, almost 21.5. You see, it's just simple as that. So this is how I use my Fibonacci. I'm just looking at the ranges that I'm playing with and how I'm going to manage my trades. So okay, let's continue. After taking this, taking out this high around here, this would be our new value area. As you can see, this would be our new value area. Now price pushed down, up again, created a middle section, as you can see. So we had another structure, as you can see. Now we are taking out where this area, as you can see. Because if you take a look at what happened here, we sold. Once we accomplished or completed this 90%, price sold. We didn't, like, we created a missing gap, you see here. We didn't like take out this level. So price moved out. One, we have our first touch, our second touch with an impulse, correction impulse. So first touch, second touch, third touch. We have taken liquidity now from the original value area, you see. So obviously from here would be expecting price to sell, and we sold all the way to around here, as you can see. So this is just, I'm just basically playing those range, I'm playing ranges, highs and low, as you can see. So it's the same goes with here. This would be my high, this would be my low now, you see. So I'll be looking for at least 90% of this whole range. That is what I'll be looking at. And of which you can see we didn't get to the 90%, but why? Because we had this original foot, we had this middle section footprint. So price rejected from here to go and retest those highs, as you can see. So let's just clear everything. Let's just clear everything. Why I'm doing this, I'm just trying to make everything a little bit more understandable. That is why I'm doing this, as you can see. So bear with me, guys. I'm just trying to break everything down in a way that like I understand and I know someone can understand, even if they don't understand like the way I trade, you see. So This is what I see, as you can see. Then what happened after? Cause like for me, guys, one thing that I do, I try to speak out what I'm seeing. I speak it out to myself, like what exactly am I seeing? I don't just do draw trend lines, this and that, draw structure. I need to speak it to myself so that I can understand, make sure that I'm understanding what I'm doing. You see. So what happened after what I can see, we had this side, impulse or correction, then we went to the downside. And even if you're playing just maybe this range from here, this would have been maybe like a 4 hour range, as you can see. This would have been in a like nice 90% rule with a tight stop loss, at least maybe like 30 pips. You see, from year to year, this would have been a simple 7.3%, just like that. And that would be like on a bigger account. This is like massive returns. So let's continue, guys. So already, if I'm just looking at this, I can spot that we have an inverse head and shoulder. Mm, inverse head and shoulder, which led to this whole move to that previous high that we have around there. So that is why price moved to the upside, that massive or that bullish. So since we have already, if we are looking from the monthly, already we took out this level. Now we have our follow through here, this bearish candlestick, as you can see from here. You can see from here, this would have been our confirmation, as you can see, that now we're going to the downside. And now after our first initial impulsive move, this bearish, long bearish candlestick, this would have been our, sorry, this is our signal around here. This is our signal. This is our signal price action. Then this would have been our confirmation. Now this is our follow through, you see. So now after this follow through, I'm now looking basically for continuations to sell at least and manage up to these areas, you see. So once price sells and comes to this area, to this lower wick here, I'll be break even by then. Even if price can come then push back to the upside like so, I'll just take a break even, no loss, you see. And because like if you take a look from year to year, basically I'll be around maybe 1.5 in profit, 1.5 or 2%, and I'll be on break even. So I won't take a loss from here unless price just moves to the upside. Then I'll go out for a 1%. You see, 1% loss. So it is what it is. But from what I'm looking at and seeing, you see already like everything is lining up. So I'm just going to the 4 hour time frame. Let's go to our 4 hour time frame. And what am I looking for? Basically, I'm looking at did we break a pre-core or like a low? As you can see, we had this structure here, and we have already broken that low. Are we trading below? Yes. We had nice like 1, 2, 3 bearish, long bearish candlesticks, as you can see. So we closed below, as you can see, we closed below. Now this is our continuation. This is our continuation, of which this is where I initially took my entry. Just like I think 30 minutes ago, I took my entry from here, and I am already like right now it's still running in loss, but I know once it moves and goes around here, I'll be like around 2% in profit. I'll go break even, and that's how I'm going to manage my trade. And if we happen to continue, get another continuation below here, I'm just going to sell and scale all my trades, continue to that level, And basically I'm playing this as like as a range, as you saw like previously. You have to forgive me guys, like this side is a bit cold, so like I'm getting like cold, like, so yeah. So I'm just playing this as like a range. As you can see, this is my high, this is my low, and my 90% will be around here. So if I'm taking any trades from here, if I'm taking any trades from here, stop loss above, just let, actually let me just try to clear everything so that I can explain a little bit. Let me just clear everything out. Let me just clear everything out. Let's erase this. Okay, so let's go to our 4 hour. Let's go to our 4 hour and highlight this structure, is this structure. So this is the low that I'm talking about, that we have already broken, and we are trading below it. This low around here. Let me highlight it. This low here. We are already trading below it. So any continuation below this low, it's a higher probability trade, because this will be our first initial continuation, and it's highly likely to play out. So I'm going to the 1 hour, look for my entry, and I'll just enter from there. So this is how I entered my trade. I entered this trade with market execution after this candlestick. This is how I just entered, and basically I placed around 50 pips, like 30 pips stop loss. So this is where my stop loss is currently around. So I'm just playing this range. As you can see, from year to year I'll be around 2.3, basically 2.3, around 2.3% in profit, and I'll be on break even. Whatever happens around here, even if price fails to break here and decides to go up again and take me out, that will be a break even, no loss. As like I'm starting my week, that will be no loss. So, but basically, let me just do this. So my 90% will be around here. This is how I'm going to just hold my trade and manage as it continues to go down or moves. Like, this is where I'll be getting out. This is where I'll be getting out. So guys, basically that is my first trade for the week, GBP CAD. And I hope you enjoyed this video. Please don't forget to like and subscribe. Like and subscribe, guys. Thank you. See you next time.